All right, everyone, here we are with ticker symbol AMD, Micro Devices Inc. And before we jump into this chart, I want to say welcome to all my first-time viewers and investors. Welcome to my channel, Invest for Tomorrow. To all my subscribers, welcome back, and let's jump into this chart. So AMD had a run here. It was above the 50-day moving average for some days. The bulls were in control until they broke through the 50-day moving average, leveled off, and quickly fell. This is a really long candlestick here. This is pretty big, and that's a lot of volume of bearish trend. This is one big jump from 86.80 all the way down to 82.05. I mean, the sell-off here was tremendous, and it started to compound throughout the rest of the day, leading to actually level off here between the bulls and the bears fighting to gain possession again. I mean, in just one candlestick, the bears dominated this and tore this down further away from the 50-day moving average. The 50-day moving average currently, after closing at 83.08, is 85.14. That's a super important number. That's the number that the bulls want to break through to go ahead and start to work their way up to newer highs and newer levels. Now, this is a very narrow stretch here, and we're going to look at it very closely. But before I go ahead and zoom in, I want to talk about the lowest point here, 81.27 before the bullish run, and now before this slight fall. 81.27 is super important here at that point, because that's the lowest point before this run. So write that down. If this bearish support level, which we're already in a very bearish location, further away from the 50-day moving average in a downward direction, and this support level is broken through, which makes this much more bearish, then the next point would be down here. Now, on the other spectrum of things, we have the highest point reached in this slight recovery, which was 85.74. But before getting there, there was a rejection that happened twice here at 85.26. It's slightly above the 50-day moving average. And honestly, that is the resistance level that there was two rejections within less than an hour, and honestly needs to be broken through. Like, the resistance level is not just the 50-day moving average. I know the 50-day moving average gets you back into bullish territory, but this point right here, which is a couple cents above the 50-day moving average, 85.26, needs to be turned into a support so that the bulls can start to work their way up to newer highs and newer levels of resistance. It's super important to keep that in mind and pay close attention to that. Now, another thing as well, since this is a very narrow stretch here, these indicators of our resistance and support are just to let us know the sense of direction of where this is going. But again, these numbers up here and the numbers way down there are the most important to let you know where we're going and what is the next level of resistance or support that's going to be hit. But the first thing is the bulls need to break through 83.21, turn that into a support so they can break away and start to work their way up to newer highs. Super important for the bulls. They need to turn that into a support. Gives us as investors a sense of direction where this is going, and they can break away from that, hitting newer resistance levels and newer highs. On the other spectrum, I want to emphasize this. It's super, super important to every investor. Pay very close attention to how this stock reacts if it breaks through the support level, and that's 82.34. If 82.34 gets broken through, I would pay very close attention to how quickly it's being broken through, how quickly it's moving further away from it, and further away from the 50-day moving average in a downward direction, and what is going on. Are the bulls trying to reappear, or are the bears tearing this one apart? Super important. 82.34. I want to emphasize that. Pay close attention to the behavior of the stock and what is going on. As always, if you found this video helpful and informative, please do so and subscribe. Please don't forget to hit the like button to let me know you watched this video. Share this with your friends and community. And also to all my subscribers and first-time viewers and potential subscribers, click on the bell. Double check if you've clicked on the bell. And if you're a first-time viewer about to subscribe, just double check if you're going to click on it. Click on the bell so that you can turn on all notifications and not miss a single video that I post. And that way you'll be up to date on every single chart analysis. Thank you guys so much for watching, and let's make some money. At the end of this video, there's going to be a pop-up video, and I go into detail about the S&P 500 index and how it's been rising up several points on scheduled dates. What happens on those scheduled dates, which are the dates that I circled here on the chart and we're going to see for ourselves? Well, the S&P 500 index rises up several points, and by doing so, they're bringing up several ticker symbols, not all of them, but most of them, up with them. And these ticker symbols are rising up 30 cents to $3 per share. And I know it doesn't sound like a lot, but per share, that does add up. And one thing I am really big on is profits. If you put $1 into the market and you get out with $2, you've made profits. You've done what the whole purpose of being in the market is for, to maximize profits and minimize losses. And with the Federal Reserve pumping the markets on these scheduled dates, bringing the S&P 500 index up also brings up individual ticker symbols with them. And again, 30 cents to $3 may not sound like a lot of profit per share, but that does add up. And like I say, profits are profits. So we're going to look here at some of the dates so that you guys can see what I talk about in the video. And it's a weekly series. I wouldn't want you guys to miss out on it. Definitely click on the video as it pops up at the end of the video and check it out. But here we are with one of the first pumps in the scheduled dates pumps. So the first one, since the last time that they had released this, they released this on September 14th, and the next one's coming up on October 14th, which is like a week from now. And on the 15th, they scheduled it. And as you can see, this is the 14th, and the 15th is this big green bar, and it rose up. So on the 14th, we were at around 33.84, and it rose up to 34.20. I mean, that's 40 points risen on the S&P 500 index, and that's creating that catalyst for individual ticker symbols to rise up 30 cents to $3. We're going to look at another one here, and the next one was on September 22nd. And here we are on the 21st, after falling from that last pump, and the market had been falling, and you could see that there is volatility on every single day of the market before the dates of the pumps, but on the dates of the pumps are the days that the most green happens, for the most part. Not every time, but for the most part. But on the 21st, which was a Monday, it was rising up, and it rose up to this point here. And the next one was the 22nd. So this is the last 21st candlestick, and this is the first 22nd candlesticks. And we were at 32.70. This one rose up all the way up here to this point right here. This was the last 22nd candlestick to 33.19. I mean, if we go back, we were at 32.70, 33.19. That's almost 50-point jump here for the S&P 500 index. And again, individual ticker symbols rose up with it, and it created that catalyst a little bit before the anticipation, and on that date it rose up. Now on this next pump, which was a little bit different, there was a catalyst formed beforehand, and it rose up to these highs on the 28th of about 33.59. It actually dipped on the date of the next pump, which we see it here, which was on the 29th of September, and the next one was on the 6th, which just happened yesterday, and it actually slightly dipped. Now, not every time is these pumps going to rise up the market like we've seen here by a lot of points, but it still rises it back up or levels it off from hitting newer lows and leveling off the market itself. Because if we look at the previous notes that I did beforehand, it was actually rising up with it. The volatility was there, but you were able to buy, like for example, how we bought here on the 15th and it rose up. Well, it's been falling and then very volatile here, up and down. Beforehand, you can buy at the beginning of the scheduled pump dates and hold a couple weeks and ride out several pumps, and you were going on your way up. But right now, even as the market's going down, it's a great opportunity to take advantage of the fact that the Federal Reserve is pumping the markets, and there's an opportunity to make profits. So here we are on the 29th, and it fell to lows of 33.28, and it rose up to these highs here of 33.49. I know it doesn't sound like a lot, but that's still a 20-point jump after dipping and recovering, and then it continued to work its way up to newer highs. Now here on the 6th, which on the 5th it started to rise, it leveled off. This is the last candlestick of the 5th coming up right now, and we're about to see it here. Yes, this is the last candlestick of the 5th, and it rose up and all the way to the last candlestick of the 6th, it rose up another 20 points. I mean, we're down here and it ended up around here. So right now, something I'm noticing is that these pumps are creating less of an effect on the market, but it's creating that upward direction from falling to newer lows, but it's still helping the market rise up. And even though the S&P 500 index is rising several points, there are individual ticker symbols rising up, like I said, 30 cents to $3. Check out the video. I go into more detail. I don't want you guys to miss out on this great information. Click on it, and thank you guys so much for watching, and let's make some money.